Hi, everybody. Welcome back to Untangling Climate Finance. As you know by now, my name is Jay Tipton, and today I have got a great episode for you. But before we jump into it, I have another review that was posted from a listener on Apple Podcast. This one comes from Captain Wolfen. Captain Wolfen says, I recently discovered Untangling Climate Finance. It nails it with its smart guests and insightful discussions on climate finance, making it a standout in the eco-conscious community. The host's ability to engage with experts brings out the best in every episode. I love it, Captain Wolfen. Both the guests and I appreciate your kind words. And if you dug the past episodes, you're going to enjoy this one. In this episode, I speak with not one, but two guests, Grant Canary and Jonathan Loevner from Mast Reforestation. Mast Reforestation is an end-to-end tech-driven reforestation company. At its core, Mast unites a heritage of reforestation pioneers, including the 130-year-old Silvaseed, plus Cal Forest Nurseries and the innovative Drone Seed. Together, they are helping landowners rejuvenate forests post-wildfires, leveraging cutting-edge technology and partnerships with consulting foresters. From developing carbon removal credits to planting over 30 million seedlings annually, Mast is confronting the challenges of post-fire reforestation and seed scarcity head-on. Mast has also made a couple big splashes in the news lately. Earlier this month, Mast and Carbon Streaming, which is a stream financing company engaged in carbon markets, entered a new purchase agreement for carbon streaming to secure 91,500 carbon credits from a mass reforestation project in California. The Bacala Ranch project anticipates its first carbon credit issuance by 2026. Additionally, the two announced an amendment to a previous deal that will increase carbon credits from another mass project in Montana to 285,000 credits, up from 225,000. And finally, the duo penned a third purchase deal last September for the Mast Feather River Dome project in California, which is rehabilitating 168 acres that were impacted by the 2020 Bear Mountain Fire. This project is expected to generate 50,000 carbon credits, slated for a 2025 issuance. So, it's quite clear that Mast is making serious moves with their reforestation projects and credit sales, which could not come at a better time because 2023 experienced an extremely high level of wildfire activity across the entire globe, releasing an estimated 2,170 megatons of greenhouse gas emissions. But enough from me, let's hear from Grant and Jonathan. Grant and Jonathan, welcome to Untangling Climate Finance. I appreciate you both joining me. How you guys doing?
Doing very well. This is Grant.
Doing great. This is Jonathan. Thanks for having us.
Yeah. At the beginning of the episode, I'm always curious to hear a little bit about the guests. So why don't you fellas just tell me about yourselves, name, job, where you're from. And I also like to hear, if you can, a bit of your career background that got you to where you are today.
I'll kick it off and then turn it over to Jonathan. Grant Canary, CEO and founder of Mast Reforestation, post-wildfire reforestation. We'll get into that. But to the question, I previously, pretty much everything I've done has been in sustainability. So hold some distinguished titles, including maggot farmer, taking food waste, feeding it to insects, turning it into industrial protein for fish farms, and simultaneously protecting the lowest rungs of the oceanic food system, and then also utilizing food waste. So built that out of Bogota, Colombia, acquired by a Canadian entity, got up to a 60,000 square foot facility there in producing maggots and taking food waste. And then prior to that, Vestas Wind Energy in China, Denmark, and the United States, and U.S. Green Building Council way back in the day before it became the juggernaut that it is today in the Cascadia region. Jonathan, over to you.
Thanks, Grant. Jonathan Loevner. At Mast, I work on a combination of carbon strategy, policy, and carbon removal credit sales. I'm a forester by background, and I've been working at the intersection of private markets, forestry, and climate for a number of years, most recently at New Forests, where I was investing in forest carbon projects on behalf of institutional investors. I came to Mast because I saw the need for reforestation after wildfire, and I wanted to be somewhere I could make more impact faster. in a non-incremental way. I think the best way I could put it, like I spent the last 5 years thinking about how to manage existing mature forests for better climate outcomes, which is important work and necessary, but incremental in nature. And now at Mast, because we work on reforestation after catastrophic wildfire, it's like the forest is gone and we're trying to solve for how we get it back, which involves biology and supply chains, but also finance and the voluntary carbon market, which is why we're here today.
Mm-hmm. And why don't you educate me on Mast Reforestation? What exactly does the company do and where in the world are you operating?
Yeah, I'll start off there, and we could turn it over to a couple of our pilot projects. But where does the company operate? Western 11 states. We, on behalf of many different types of landowners, manage the majority of the seed inventory for the Western 11 states, and we grow the majority of California's trees. That's with Silvaseed, which is 133 years old, and then Cal Forest, which we acquired in 2022, which is 40 plus years old. The problem that we're solving, Jonathan mentioned the supply chain, is that what does a land manager do after their forests are impacted by wildfires? And we work with a number of different landowner types. So this is timber companies, this is tribal nations, this is public lands, this is small family forests, and this is nonprofits like the Nature Conservancy and others. All of them are impacted by wildfire. And what are their options when that happens? And up until the sort of 2000s, one option was more often than not used by everyone but timber companies, was to do nothing, and that the forests would regrow. We've now started to see some pretty significant series of papers come out saying that option, the null option of doing nothing, we're seeing a decrease from sort of 90+% probability that forests will regrow to somewhere between 40 to 75%. And when forests don't regrow, one of the big concerns is that invasives come in, and they're more likely to reburn because they don't retain moisture through the dry summer months. The other options are land managers can sell. That's usually a 50% loss in the comparables that we've pulled if there's a buyer that's available. Many places in the Western 11 states, the third option there is that they can spend many millions of dollars to reforest for a couple thousand acres, a couple $1,000,000. A lot of land managers don't have that capital. Even some of the bigger players in the space, if they weren't planning for 10,000, 20,000 acres of property to burn and they don't have the timber revenues to reforest, that's a big hit. And then you look at, furthermore, there is a net present value analysis, or the return. It might be a 60 to 85 year wait in many areas in the Western 11 states for trees to regrow. That's a lot of compounded interest to compete with. And so that's not economically rational in a lot of places for timber, but it is for carbon. And so that's what we provide, which is no upfront cost reforestation. We utilize carbon removal credits to pay for it. And we take care of the full vertical supply chain of where does the seed come from? How does it get into the greenhouse and get grown? How does it get out to site and get planted? How does it get registered with Climate Action Reserve? And then subsequently, how do the credits get sold and who buys them? And so that's really the problem that the company exists to solve. And Jonathan, I'll turn it over to you to talk a little bit about some projects here.
Sure. Maybe I will focus my comments on our current project in Montana, Sheep Creek Ranch. This is the sort of the northern edge of the greater Yellowstone ecosystem. So it supports migratory habitat for elk. There's a grizzly bear population in the area, hugely important for biodiversity. In Harris Mountain Fire a few years ago, nearly the entirety of the ranch burned catastrophically, to the point where the forest is not able to regenerate on its own naturally. This particular landowner doesn't have the means to finance reforestation on his own. And there's not the kind of timber economy in this particular area that would support that kind of spend in reforestation. So through a Mast Reforestation project and our partnership with Carbon Streaming, which we'll get to talk to more in a minute, we've been able to cover all of those expensive upfront costs of reforestation. We'll be implementing a long-term conservation easement developing a carbon project. And then those proceeds will from the sale of the carbon credits will cover all of those expensive upfront reforestation costs.
Great. And I guess to help you along in your mission, you all announced a very large announcement in May, so just a few months ago, that you had secured $15 million in financing with Carbon Streaming, who you just mentioned, to advance your pipeline of post-wildfire projects. So first, huge congrats. That's incredible.
Thank you.
Yeah. And second, can you explain the investment to me? I mean, I can assume you're just going to take the money and go out and try and implement poor projects, but what exactly is Mast going to be doing with all of the new moolah?
Well, let me give that some more emphasis on why that's a big deal for a climate tech company, and then Jonathan's going to take on all the details and go from there. But the joy in this here really is that like there's 2 or 3 companies, including ourselves, that are really on the vanguard of utilizing project finance to fund removals or other restoration activities. And we're VC backed. VCs historically have had this funny adage of like, in some cases, we don't invest in things with atoms. That's basically to say that software as a service, SaaS, is a much more profitable business model than anything that has to do with hardware or otherwise. And yet you take that in the context of like CO2 removal, and you're not going to work with atoms. That gets really difficult. And so the thinking there is like, okay, well, how is VC like working with climate tech to actually do the removals? Yes, we can measure, but like when do we get onto the removal part, the like really critical part? I mean, that's why the project finance is such a big deal. And it's something that we see a lot of companies moving towards. So happy to be finding that path, so much so that, the evidence here, we're Elemental Accelerator portfolio. That's 150 plus companies in various cohorts. And this has become such a conversation that they've hired somebody specifically from the project finance world to come in and help those portfolio companies, including ourselves, navigate this space and figure out how do we find the right source of capital to be able to fund reforestation, like Jonathan just described with Sheep Creek. That's several $1 million. If we do it with venture capital, that's really expensive capital because that's percentage of the company that we don't ever get back. And so how many projects could we do like that before we are simply out of percentage of company to give to additional people, or have diluted investors so significantly that their return isn't something that they're really very excited about anymore. So the answer to that is utilize the carbon removal credits as collateral for a loan. And that is what enables us to, over the 3-year project window, execute the project, do the reforestation, collect the seed, get it into the greenhouse, get the existing trees that are fuel for the next fire that are dead and have no chance of regeneration, get them removed. And then also similarly, get into how do we create, as Jonathan mentioned, that 100+ years of funded monitoring with the conservation easement, so that those trees are protected and then get the credits sold. And so that's why this is such a big deal, is because this is not just for forestry, but this is for ocean base. This is for biochar. This is for potentially chemical processes as well. And it starts to find this path between the right source of capital and climate tech backed companies. Now, we still keep the VC focus, but this is another stack of capital that we're able to add to our toolbox to be able to execute on projects. And so with that, I think, Jonathan, getting into the nitty gritty of how all this works, that's where I'll turn things over to you.
Yeah, that would be great. And Jonathan, just to tee you up a little bit, I know that this specific type of agreement is called a stream financing agreement, which undoubtedly some of the listeners will not really understand what that means. So maybe you could describe what is meant by stream financing and how that agreement works, and then just take us through the way the funding is being implemented.
Great. Thank you. And I always appreciate the tee up, because otherwise I'll just ramble. So we'll start with stream financing. So this is an instrument that's borrowed from other industries, mining and oil and gas. We're borrowing that structure and we're applying it to good, in this case, to fund carbon removal. It essentially means that carbon streaming, as the investor, is investing in the carbon project today before that project exists in exchange for a certain right on the future carbon credits that are going to be generated and issued from the project. So the money goes directly into the project costs. That could be preparation of the site for planting, as Grant was describing, growing seedlings for the project in Mast's nurseries, getting those seedlings in the ground, monitoring them to make sure they survived, and then all of the modeling and documentation and field work that goes into developing a forest carbon project. So carbon streaming invests in the project. Mast does all that development work I just described. Carbon streaming and Mast collaborate on the marketing and sale of the credits generated from the project. The proceeds from the sale of those credits go to pay back carbon streaming for the money they've invested, plus a return on their investment. And then the balance is split between Mast and our landowner client, who's the other very important third party in this equation. So we split that balance 50-50.
Got it. You answered actually one of the questions I was going to get to, so I appreciate doing that. I know that some of the next questions I'm going to ask, you might not be able to give me the full detail in terms of confidentiality and the agreement that you have with carbon streaming, but I guess to the best of what you can, is carbon streaming getting 100% of the credits that are being generated from a project?
So the revenue from the credits is split between carbon streaming, Mast, and the landowner. Carbon streaming would get paid back first, since they put their money at risk, and then the residual is shared between Mast and the landowner.
Got it. And are the credits being purchased via ERPAs? Or if so, can you explain how you're kind of landing on the strike price for the credits? Is it a fixed price, or is it being indexed against the market at the time? Or
That's a great question. So yes, we're selling the credits via ERPA, which for the audience is an emissions reduction purchase agreement. Most recent sale from a Mast project was $35 a ton. We've mostly been selling this in this format of fixed price forward agreements. So the buyer is agreeing to take a specified volume from a specified project at a specified price within a certain window of time. As the market matures and Mast scales, I think what we're really looking to do is have more longer term offtake agreements with large buyers so that they would cover multiple projects over multiple years. That would allow us to focus on what we do best, which is really putting trees in the ground and making sure they survive, and less time towards marketing carbon. In terms of the pricing question, I think we've experienced significant price discovery in our first months and years as a carbon project developer. We're still at a point, I think, in the market where you have many different credit types, fairly low transaction volume. Most of those transactions are over the counter. That is to say, when Mast goes to sell a credit, it's me or a colleague talking directly with the buyer. It doesn't go through an exchange or traded on a screen. The same volume of information or transparency that you might in other commodity markets. So it's based on, in many cases, what are the alternatives for the buyer, which is to say, like, what are the other types of projects they could be buying from, and what are those credits cost? And I want to tee up Grant to talk about that in a second. And I think it's like, also, what does it cost us to produce the credits? Because these are very expensive projects. If you think about all of the site preparation and supply chain that go into creating a successful project.
Yeah, absolutely. And I mean, you guys are so involved from literally very beginning until the end. And so I feel like that's a vital element of the pricing.
Very much so. And I think where I'd like to situate this is, like, to Jonathan's words, like, there's been price discovery. What does it cost for us to do this? And then also, what are the returns that are going to satisfy all the parties? And we're at a near 50-50 split, if not an exact 50-50 split with our landowners, which is a big attractant for buyers, because there's been some questions about, like, how much does the developer take? How much does the people on the ground take? And, like, we're in partnership there. And rightfully, like, our lender here, Carbon Streaming in this case, like, they've got to get their capital plus a fixed return before that then sort of waterfalls down to ourselves and the landowners. So that's kind of how that's structured. But where is this situated in the general marketplace? this gets into some of the taxonomy of what's compliance, what's voluntary, what's avoided deforestation, what's credit removals. So if we head down that path, what I'd love to have the audience take away is like there's 170 different types of different carbon crediting systems that are out there per ecosystem marketplace. And we're on the voluntary side, not the compliance side. The compliance side being some of the state and government entities forcing very significant carbon emitting sectors to capture or rather otherwise pay for effectively a tax on that pollutant. On the voluntary side, that's where we sit. And then you kind of have to have one more fork down that road, which is it a removal or is it avoided deforestation? Avoided deforestation being like, obviously, no one wants to see the Amazon get cut down if we're thinking about it from a climate perspective. And so how do you then sort of track that? And how do you pay people and compensate people for not doing that? That's not what we do. We're on the removal side, which is how do you pull carbon out of the atmosphere? And we're on the nature-based inside of removals. The others that are sitting in that space are ocean-based. We've got biochar. We've got lime and other processes. And then we've got direct air carbon capture. And so I think as far as that $35 price point, we do very, very large volumes. That's something that we're pretty excited about there. And then where that sits comparatively is you've got biochar sort of plus minus 100. You've got some ocean-based in the 200 to 700 range. You've got some chemical processes and direct air carbon capture in the $600 to $2,500 a ton. So that's how much it costs to do some of the removals. And we've seen some pretty negative press with John Oliver, the Gordian piece, others on the avoided deforestation, some of the methodologies. So I think like where I would take that is like those credits are generally significantly cheaper because the trees have already grown. Nobody had to find the seed and grow it and get it planted. And the cost of those projects are significantly less. But there's been some criticism lobbied at that because it seems like it's very inexpensive. It costs $3 to $7 a ton to capture it, to protect it and embodied in those trees. But it costs $3 to $4 to fill up at a pump, like for a ton versus a gallon, and they're kind of the same. That seems off. And so I think like the criticism there is driving some reforms there that I think we're pretty excited to see. By no means are we want to see the Amazon get cut down. It absolutely should be protected. It absolutely should, people who are in those local communities absolutely should be compensated to have the resources to protect it, so on and so forth. But I think also there's a cry for like, well, how do we think about like what's moving the needle the most and what's the most efficient way to resource those methodologies? And so that's kind of where we sit in the landscape there. And yeah, so that to Jonathan's tee up, I also appreciate a tee up there. Happy to have more conversation on that topic.
Well, one thing I wanted to bring up was that, as you'd said, there's quite a bit of criticism going on right now, especially around REDD+. But one of the elements of that is the additionality and the nature of what you do in your work, which is going back and planting forests that are burnt down. You kind of dodge that additionality part because the case for the additionality is pretty clear, right? The trees are no longer there. You're planting what is now gone. So in one instance, this is a very strong positive case for the work that you guys are doing.
Yeah, absolutely. Well, and I think we should just crush the monitoring, reporting, and verification and the additionality side. So, with permission, would love to drive into that further if that's all right.
Yeah, please, Grant, go for it.
Here's where we sit on this is that I think this is like probably helpful for folks to just sort of sit through and just kind of sit with this info. But like one of the stats out there that is very mind blowing is that California's 2020 wildfires emitted about 127 million metric tons of carbon into the atmosphere. That's the estimate. And you can read about this in LA Times. I believe Ecosphere is the source. If not, I'll follow up when we put it in the notes. But compare that to the state's 18 years of hard-won policy wins in changing electrical generation, transport, etc., which total only 65 million metric tons. So 1 year of wildfire nearly double what the savings of or avoided emissions have been from 18 years of wins at the state level.
Mm-hmm.
So I think like just on that basis, kind of heartbreaking to hear that. And there's no bad corporate entity to blame. I mean, you can find some for the causes of the fire, but as far as like why are we in that place? What do we do about that? How do we restore things? So what we do is that when we come in and we restore forests, we are doing it at a much lower density. We're doing it with polyculture, so multiple species, and we're utilizing seeds from as close to the fire as possible that we've collected that have huge genetic diversity. Those are the like how we restore for greater fire resiliency. And we can dig into deeper on those. And then on the monitoring, reporting, and verification side, when we do a project, when we plant those seedlings out there, there is a wait period of 1 year where a third party that's accredited under Climate Action Reserve has to come out, do fixed radius plots, which are very old school forestry, which means picking random points and counting up the trees that are alive inside of those, an 8-meter circle, the right density, they're alive, they're the right species. And then and only then does that report get submitted to Climate Action Reserve. And then as a part of the issuance of credits, a percentage is removed for a buffer pool so that if there is a reversal, our buyers, Shopify, Time CO2, Carbon Title, others, they know that the credits that they have paid for they're coming from our project, or just like sort of health and auto insurance, they're coming from a buffer pool, and every project is paid in a percentage of those credits to the buffer pool. Lastly, the piece here that's like super critical for those buyers and really exciting is that there's 100 plus years of funded monitoring and protection. So in that those project setup costs that Jonathan mentioned that we received the project finance for, there's an endowment that pays for a land trust, another third party, which is a nonprofit, to issue an annual report for the next 100 plus years, as well as do a site visit every 5 years, where they go boots on the ground, verifying that their right to a minimum quantity of trees per acre has not been impinged, which nobody wants to see it impinged. So that's really the like one of the big pieces as far as how we've driven. And all of our projects are in the Western 11 states. So the risk of encroachment, AKA who owns this land, who's utilizing it, U.S. land law, quite clear on property boundaries. So not really a big concern or driving factor in the project setup there. So those are some of the different pieces on the monitoring, the reporting, the verification. I'll make sure I turn it over to Jonathan to add anything here and pick up anything I may have missed.
Grant, that was great. No gaps to fill. I think I would just reemphasize, like, answering the question, like, what's different about a mast reforestation project versus another reforestation project? The first is that we've built out this vertically integrated supply chain. And so we are doing everything, sourcing the seed, growing the seedlings, putting them in the ground, doing all the forestry. The second is that we're implementing these 200-year plus, sometimes perpetual conservation easements, which provide a legal guarantee of permanence that's not typical in a carbon project. And then third, the funding of the long-term monitoring and the funding of long-term forest management so that we are ensured that forest is healthy going into the future, that the risk of another wildfire is reduced, and that from the carbon buyer's perspective, we are ensuring the greatest degree of permanence that we can.
Mm-hmm.
And what I'll add to that is that like 100 years is a long time. So how do you fund something? I mean, Jonathan and I both use the word endowment. It's just like a university. It's a big pool of capital invested in the market, provides a percentage return. And those land trusts aggregate those pools of capital so that there's a bigger and bigger pool of capital providing percentage return for them to do their work on a nonprofit basis. So that's something that I think, and it's no different than any other university, other large endowment that people see out there in the world.
Right, exactly. It's more or less the exact same thing. I want to go back to the 15 million, because that is obviously it's not easy to go out and raise $15 million. And at the same time, as you just mentioned, Grant, the amount of forest fires that we're seeing in California, all over the US, Canada, is unfortunately growing. And so the work that you're doing is extremely important. And so what are the roadblocks or what are the challenges to scaling up the work that you're doing? Because you can't, I assume, just always be relying on hopefully the next round of funding. So the scaling is necessary, obviously. So what are the challenges that you guys are facing and going beyond?
Well, I think this is where this is a public and a private partnership to execute on things, and both are very challenged by what we're seeing with the increase in the size and severity of wildfires. And just to put some numbers on it, if we look at the National Interagency Fire Center data in the United States, the 10-year rolling average, so making sure I'm not cherry picking anything, from 92 backwards, 1992 to 82, was something like 2.5 million acres burned, 10-year average. Now, fast forward to today, we're at about 7.5 million acres was the 2022 10-year average looking backwards. That increase of about 5 million acres is about the size of New Jersey. So we're seeing an extra New Jersey burn on average each year. So it's stochastic, it goes up and down. But just to put that in perspective, we saw Canada this year, most of the East Coast affected, they lost 20 million acres so far. And fire season is no longer just June, July, August, like, oh, great, it's over. It's like, no, the Paradise Fire was November. So the longer dry season is one of the things that is fueling this, which is that we will eventually be at probably a year-round wildfire season if we don't mitigate some of the worst effects of climate change here.
Right.
That does bring up the question, why do we expect our forests to survive? Well, at the top of the call, I mentioned that we are seeing the null option of just hoping that the forest will regrow, which is what I was taught in high school bio. We're seeing that happen less and less. And the reason for that is because the not only the size, which I've hit, but the severity of fires matters here. So the severity, what's happening is when high severity fire goes through, it can burn all the way up to the top of the crowns of the trees where a lot of cones are, as well as several inches into the soil. And a low severity fire, which has historically been part of the natural ecology of the site, that's not what happened. It sort of burned the lower middle half of the trees, or it was like a creme brulee across the top of the soil, and it didn't destroy all the seeds stored there. So what's changed in the severity? Well, we've had a century of fire exclusion where we've done a very logical thing. Smokey the Bear told us, if you see a fire, put it out or don't start one, right? Clear, it would kind of be logical. Okay, if you see a fire, put it out. Well, that's not how nature necessarily managed forests. It used, low severity fire cleared out a lot of those fuels, the underbrush, things along those lines. And so now we have these sort of tinderboxes. Like you can see Tom Porter on 60 Minutes in 2020 saying look, used to be like a 10,000 acre fire was this huge fire. And the firefighters would be really proud to have worked on it. You get a sweatshirt and so on and so forth. And it was a career fire. You'd see it once in your lifetime. So that gives you an idea of what a century of fire exclusion looks like. 10,000 acres is a big deal. Now we're 20 million acres in Canada, or we're at 1 million acre in Alaska last year. The August complex fire in California was 1 million plus. So it takes a lot to even make the news these days. And if you look on a map, there's usually several hundred fires in fire season going. There might be one or two that hits the media cycle. And what one of the causes of that is the density. So we expect our forests to live, because we're looking at, for our area of the sort of Northwest, depends on the species and the ecosystem, but we're looking at 200 plus trees per acre at the, sort of 25-year mark. Where do you see timber production? Well, they're doing the logical thing. Get as many 2x4s or board feet per acre as possible. So you might see 300, 400 trees per acre. You look at the Forest Service, you can see kind of low acreage, but you can see all the way up to, in some cases, 1,000 trees per acre, because they haven't had the budget to be able to do some of the thinning. And the prescribed burns, you can hear it on other podcasts and locations, but like people call in air quality concerns before the prescribed burns even started. And so that's super frustrating for the Forest Service. We should give them more money to do the thinning. But at the same time, like what we end up with is these forests that are incredibly dense, and they're very, very susceptible. So when we restore, we're doing it at much lower density. We're doing it with multiple species. I like to point to ponderosa pine because it articulates how different species have evolved with fire. The ponderosa pine, like the bark is kind of like a crush bumper on a car. Like it's evolved to burn a bit, and as long as the fire isn't too severe, the tree will live. And then similarly, we're utilizing seed from as close to the fire as possible, because just like a financial portfolio, the diversity in the genetics manages the risk, because it's not just fire. There's also ice, there's also insects, things along those lines. So all of that is to say that we expect low severity fire, our trees to live, and we expect low severity fire because we have much lower density because of the sort of the polyculture and some of the other aspects. If forests do burn, we have an interesting place where we're taking things. First is obviously it's the reforestation, but how do we capture that carbon? Well, 60-80% of that carbon, depending upon kind of species and ecosystems, again, which I keep having a caveat, but those emissions are often after the fire in the decay of that biomass. So it's something that we're excited about, the direction that we're headed there, but I've been kind of going for a little bit. So let me pause there and offer some opportunities on choose your own adventure on where we want to go.
Yeah, that was great. I actually appreciate you going through all of that. What I'm really curious though about is how do you scale up your business, right? Because as we said, there's just the fires are bigger, they're more frequent, they're lasting longer. So more forest needs to be reforested. What's standing in the way of Mast being nationwide, or your competitors also being able to address this need of needing to replant more forest in terms of the finance? Like what's the roadblocks that you guys are facing?
Jonathan, why don't I kick that one off? You follow up, and then I'll put some numbers behind it. But all of that discussion of like the increase in the size and severity of fires should indicate that neither public nor private has been preparing for this in any significant way. So that means that there is not enough seed. That means there's not enough greenhouse grow space to grow it, even if there was sufficient seed. And it also means that the like labor crews to get it out to site are challenged. And then lastly, how do you pay for it all? And that's really where the project finance has come in, and has been something that we're really excited to be clearing that path, because without the finance, like it's, and that's to say without the lender and without the carbon removal credits, a lot of this work isn't possible, because there isn't just a couple $1,000,000 sitting around to be altruistically put into what is economically not a rational investment in many cases if it's for timber, but it's a very rational investment if we're looking at carbon removal credits. And that's because of how the credits are structured, and we can get into that. But we started off focused on that third problem. How do you get the material, the genetic material, out to site after a fire? And what we quickly realized, or I wish we could have realized faster, but it was not apparent, was that there was a seed supply issue. And then similarly, there was a grow space issue if you had the seed. So what's the most efficient way to get that to utilize seed? Well, it's to grow it in a greenhouse. And we at Drone Seed, like we utilized it in a really significant way. And we definitely outperformed natural processes by in a degree that we're really proud of. But if we compare it to putting a seedling out on site, we got to a place where we could do more today with seedlings than we could delivering it with drones. And drones, seed, you've got to have the seed. So we acquired Silvaseed in 2021. And what we did there is we expanded the seed available to frontline communities affected by wildfire 3x in the time that we acquired it since 2021, utilizing a lot of software-based technology to organize collections and identify where we needed to collect. So we have coverage across the Western 11 states that follows the U.S. Forest Service guidelines on kind of the ecological aspects of a site. And then great, we've got all this seed, we're off to the races. Well, we need a place to grow it. Silvaseed has some greenhouses, but not nearly to the extent Cal Forest does. And so in 2022, made the acquisition of Cal Forest. And we're now growing, depending upon the size of the seedling and so on and so forth, about 25 to 30 million seedlings. And so that's something that just at Cal Forest. So that gives us a lot of grow space to be able to satisfy that. And it's something that's really exciting as far as the knowledge as well as the technology at Cal Forest and being able to employ that into what is the next iteration of technology-enabled greenhouses look like. And we call that a terrafactory because we like to have fun with words. And we've got some folks that have a sense of humor about these things. It's a nod in a couple of different directions, but what it means is it's a technology-enabled greenhouse to be able to grow purpose-grown seedlings for post-fire sites specifically. And the reason for that is the supply chain is absolutely overwhelmed. Our estimates that the Western 11 states needs about 6.5 billion seedlings, billion with a B. And then if we look at all of the production capacity for those same 11 states, it's around 139 million seedlings, million with an M. And you could look at other estimates similarly, like I think New Leaf just came out with something. So similarly saying look, billions of seedling, a billion plus seedlings needed. Not sure how far out they were projecting demand, but again, 139 million seedlings is what's generally produced across those 11 states. So we're going to need a lot more supply chain capacity to be able to reforest after fire. And then when we do, we'll be restoring these low density forests that can manage that we will see low severity fires in, that will be healthy, and the forest will survive on a much higher probability basis. Jonathan, again, run long, so jump in here.
No, that's okay. And Jonathan, jump in a second. But I did want to say that I was going to ask you specifically about the seeds and the seedlings and what's the status of that. And so you got right to the core of the problem, which is that simply there is a massive shortage, and that is a huge issue that needs to be addressed. But I'm glad that you guys are kind of taking that head on. But Jonathan, over to you.
Thanks, Jay. And like usual, Grant gets to give the really fun and exciting answer, and I'm going to give the more boring answer.
The boring details are where all the execution is, Jonathan.
Yeah, right. Gentlemen, this is fundamental to the conversation, fellas.
So I'll offer one response to your question, Jay, about what do we need to scale a business that has to do with carbon standards and methodologies, and then a second that has to do with capital markets. So on the carbon methodology side, I think what we really need is a consolidation of standards so that we know that certain standards have universal acceptance by buyers. As Grant was describing earlier in the conversation, there's nearly 200 different carbon methodologies producing different credit types. We'd like to see that consolidated. At the moment, we are, as a market, but also Mast specifically, we're really still in this mode of doing a lot of storytelling, here's the landowner, here's their story, here's all the amazing species of wildlife that are represented on this project, and so on and so forth. In the contest of storytelling, I think we're a winner because we're very good at that. But when we're getting to the place in a few years of doing 100,000 acres a year of reforestation or 400,000 acres a year of reforestation, that's a lot of credits. It's a lot of projects. It's probably too many stories to tell at one time to convince buyers. So I think we need, as standards consolidate, what we'd expect is a carbon removal credit marketplace that is more commodified and more liquid. So it's easier to sell the carbon removal credits. That makes it easier for us as the developer to go raise money for projects. And that helps us scale. And I think we're seeing a lot of steps in the right direction, and certainly the ICVCM, the Integrity Council on the Voluntary Carbon Market, their core carbon principles that sort of define here is a good methodology that should hopefully give confidence and cover to all the important corporate carbon buyers of what they can buy. So that was the question, the answer on standard side. And then on the capital side, I think there's overwhelming agreement that reforestation is really important for climate, in addition to all the other benefits that it provides. But the challenge is that forests grow slowly. And as Grant was saying earlier, it might be 70 or 80 years before a mixed conifer forest in the dry part of the Western US reaches maturity. Right now, capital doesn't exist that is happy to sit in a project like that for many decades. So we're optimistic that'll come soon, where just like investments in other types of infrastructure, highways and airports and dams and so forth, investors in carbon projects will be able to take a long-term view beyond the maybe 5, 10, or 15-year typical fund life for a private equity type vehicle.
Well, I mean, John, let's take that into how we're solving that problem today, because I think that's a worthwhile conversation. I mean, under Climate Action Reserve, what we have are two methodologies that we are connecting so that we can finance these products. So the first one is a climate forward. So as we've mentioned, it takes us about 3 years to do a reforestation project. Ideally, we have the seed in inventory that's local and collected nearby. If we don't, we've got to go out there and get it. Trees don't pump out plentiful crops of cones each and every year. It's potentially as low as once or twice a decade, and it's a mast event, and that's where we take our name. So we get started with a project with the Sheep Creek project in Montana. We were lucky, and there were a number of species that there was a mast event. And we were able to do the collections. In other areas, we weren't able to do those collections. But over that 3-year project timeline, that's 3 years to get seedlings into the ground, to get them verified after that 1-year wait period that I mentioned, and then get them over to Climate Action, get the reports over to Climate Action Reserve. What we are then utilizing is, well, we can project with really strong certainty how much carbon is going to be captured over the next 100 plus years. Why can we do that? Well, we've had so many decades, maybe centuries here, of doing that with timber. And you can absolutely bet that any timber company or the Forest Service can project, like, well, for this species and this soil type and so on and so forth, this is how many 2x4s I'm going to get out of this property. Well, going forward, you can convert 2x4s into tonnage. And then similarly, we benefit in a really significant way in a way that other removal technologies don't have the luxury of, which is that we've got a living library of trees with tree rings and how fast did they grow and so on and so forth that is just nearby. It's a data set that's hugely valuable. So we're able to project that and then make that very, very conservative estimate and then say, great, this is how much will be projected. That's how much is then credited at the end of that 3-year time window of what will be captured over the next 100 plus years. And that's a claim. This is how many tons have been credited over the next 100 plus years. And then connect that to a second protocol, which then allows us to verify that projection on a pretty regular cadence, which then those credits are, as the trees grow over the next 10 plus years, those are an ex post credit that can then be retired against net zero claims if companies choose to make those, or against other climate targets. And then from there, we've got something that we're very excited about with the removal of dead biomass. And how do we take that biomass, which we are already going to remove from the site because it's fuel from the next fire, and store that carbon so it's not releasing all of that carbon over the next couple of years, which is responsible for so much of that emissions from a fire. But Jonathan, I want to again tee you up here to speak to both the Climate Forward and the U.S. Forest protocols, and then add some of the other crucial and important execution details on this before we jump into that.
Yeah, certainly. So as Grant was describing, we're coupling these two methodologies. And at a high level, the idea is that through that climate forward-looking methodology, the projects are being issued ex-ante credits within a few years of the project start that represent that 100 years of forward-looking carbon removal. Those can be delivered to buyers and provide that important near-term finance that we need. And then over time, we've re-verified the project under that U.S. Forest Protocol ex-post methodology that allows us to then convert those ex-ante credits to ex-post credits over time. They then become fungible with all the other types of credits that we're familiar with in the market, and they can be retired against corporate climate commitments and against prior year emissions.
And the whole reason for all of this is that if, as Jonathan mentioned, if we're hanging out waiting for entities to fund 100 years and waiting for the trees to grow, like that's we had a decade where that was tried, and very few, if any, projects were ever brought to market. And so reforestation simply just wasn't getting done. And the reason why is because that's a lot of compounded interest to compete with. If people remember sort of the grade school presentation by a bank of like what a dollar would turn into in 20 years with compounded interest, like it didn't make sense. It didn't pencil out financially. So this climate forward methodology solves for that, allows the claim, and then also allows for here's what that looks like on an ex post basis. And Jonathan, we should do a little reversal here. Why don't you take the fun one on explaining on where we're going with wood vaults and I'll follow up.
Yeah, I would say it sounds like, the gears are turning at the Mast team for looking towards the future. So Jonathan, please indulge on, what you guys have coming up.
You got it. So as I think we've highlighted in the conversation today, like the two biggest challenges we have on each project is one, like the high cost in particular of processing and removing all of the dead biomass that's left over after a fire, which could represent 70 to 80% approximately of the pre-fire carbon is still on the site in the form of dead trees. And then the second is lining up the right kind of finance for the project. Something that we're working on currently is implementation of terrestrial biomass storage projects embedded in our reforestation projects, also known as wood vaults. What that looks like is basically we process and consolidate all of that dead biomass, and rather than allowing it to decompose in piles on the site, we would store it long-term in a vault-like structure, and that could be below ground or above ground, depending on the size of the project and soil types and some other factors. And when done correctly, you can achieve ultra-long duration storage, certainly beyond 100 years. Through a emerging methodology, through Pure Earth, we could receive ex-post carbon removal credits within 1 to 2 years of starting a project, representing all of that carbon that we're storing in the wood vault that would have otherwise decomposed. So that helps us solve this operational challenge around what do we do to remove this dead material that causes a safety hazard for planters, but also increases the risk of a return wildfire event. And it solves this problem of finance to a certain extent, in that it will generate these high value ex post credits within a year or two that can then provide additional critical finance for the actual reforestation that follows.
And I'm so excited about this because this is very much like something that, as far as solving a number of problems simultaneously, I always love that when like there's just sort of this like, great, here's a key, and it unlocks a path to much greater scaling and ability to capture carbon. So say our forests, other forests burn in the future, this is something where we can take that and we can store that, and that we don't lose that carbon from that work that the trees have done as a highly efficient, highly evolved organism to capture carbon out of the atmosphere. So that's something that's very cool from that perspective. It answers one of those key issues there.
Absolutely. And unfortunately, we're running out of time, because I feel like we could have a whole episode on wood vaults alone. So I might have to invite you guys back for a part 2 where we're just discussing wood vaults, because this in itself is a very fascinating concept. And I think that would be a good conversation to have.
I would love to have it for folks looking for resources. Pure.earth, NASDAQ backed, so you can hear a little bit about them. And then similarly, like if you want to kind of think and conceptualize around what it looks like at the end, it looks like a hill with grass on it or otherwise out at a site in the way that we'd utilize it. Or if folks, I think it was a Washington Post article about a month and a half ago, like you could think about it in the context of a number of logs in the permafrost were starting to be exposed and then start to off-gas methane, and that was a big problem. Well, this is the opposite of that. It's putting those logs in an anaerobic condition so that they're not breaking down and off-gassing methane. That's kind of conceptually what that looks like. But for another episode then.
Yeah, perhaps for another episode. And absolutely, I will put links to the stuff you just referenced in the show notes. So for everybody listening, if you want to dig more into this, I will make sure that there's links for you to go explore, because Yeah, that's cool. Well, gentlemen, thank you so much for joining me. This was an awesome conversation, and I am a huge fan of what you're doing. And I think that you guys are really doing some good work out there and helping the West. And I hope that you guys are able to at some point expand, because unfortunately we're going to need it. So thanks again, and massive kudos and my congrats to the team for the work that you've done this year. And I hope that the rest of the year is as good as the first half has been.
Our pleasure. Thank you.
Thank you, Jay.
And that is it on today's episode. I hope everybody enjoyed it, and ideally you learned something. And just a heads up, in the show notes, I'm going to put a link to a video about a project that Mast is doing in Cascade, Montana, a reforestation project that is planting seeds and trees post-wildfire. So look for the link to the video in the show notes. Also, make sure you tune back in next month to hear my conversation with Rick Gilmore, who is the president and CEO of the GIC Group. Rick and I pivot away from forests and towards agriculture. We discuss his innovative commodity plus carbon futures contracts, which incentivizes emission reductions for strategic commodities, biofuels, and food and feed products. The goal of the futures contracts is to help the entire ag value chain gain in adding value-based emissions reduction practices and preferences. It's a very, very cool approach, and you do not want to miss our conversation, so make sure you tune in next month. And before you go, please take 1 minute to subscribe and leave a review for us on Spotify or Apple Podcasts, whichever you prefer. If you listen on Spotify, make sure to hit the bell at the corner so that you get reminders when new episodes release. And as I've said in the past, in addition to Untangling Climate Finance, we record weekly audio versions of our newsletter Sliced, so there is always, always, always a steady stream of new content and thought pieces coming from our channel. And if you leave a review, I'll make sure to read it at the top of an episode. Finally, if you want to connect, you can shoot me an email at jtipton@gordian.strategies.com. A link to my email address is also in the show notes. And that is it. Thank you to everyone for listening and always for the support. I will catch you next time. This podcast is produced by Gordian Strategies.